Important economic data has come out this week. We've had a few days to digest everything. So let's go over all of the information that we know so far in terms of Canada's inflation rate, the upcoming rate cut, the current numbers, what all the released numbers mean for the next Bank of Canada meeting in July. If you're not aware, there was a surprise inflation release mentioning that inflation had actually increased to 2.9% in May 2024, surpassing economists' expectations of 2.6% and the previous month's 2.7%. Okay, so inflation a little bit higher. Not good. That means that there is a lower chance that there will be a rate cut come July. And we're going to dive into what was included in that release, or what numbers made up that inflation rate of 2.9%. Key inflation factors: shelter costs remained high at 6.4% year over year. Food prices grew from 2.3 to 2.4%. Increases in transportation, health and personal care, recreation, education, and reading. Services price rose 4.6%, up from 4.2% in April. Core inflation measures. The Bank of Canada's key measures also increased. CPI median rose from 2.6%, and then trim had also increased. So Bank of Canada, we do know that they cut rates by 25 basis points on June 5th. This was the first rate cut in over 4 years. Very important, significant news. Inflation rate remains within the bank's 1 to 3% target, but barely. We're just at the top of it, 2.9%. The Bank of Canada sees this and they're wondering, maybe we should wait a bit, because we were in the target and now we're moving almost away from it again, right? And if we move out of it, then there's a problem. Expert opinions and market reactions. So BMO's chief economist, Doug Porter, said this is not what the Bank of Canada wanted to see. This was not what they wanted to see. And the probability of a July rate cut has dropped from 65%, which was pretty good, to 54%. Now it's almost like a coin flip after the data release. CIBC economist Catherine Judge expressed concerns about the likelihood of a July cut. And what does this mean for, homeowners and, let's say, the mortgage industry? Definitely, you want to focus on cash flow, okay? You want to focus on making sure that you have enough money for these upcoming cuts, whether they happen or not. If your mortgage does come in high, you want to make sure you're able to absorb the upcoming payments. There is uncertainty about future rate cuts and potential financial challenges. We've kind of talked about that in other videos, about how there's going to be payment shock with a lot of people with these upcoming rates. Mortgage interest costs surged by 22.3% annually. And now looking ahead, next Bank of Canada meeting is scheduled for July 24th, 2024. The July 16 inflation reading will be crucial for the bank's decision. So that's a key date to look at, July 16th. I would say more cuts next year, 3-4 cuts. But again, all these cuts are smaller. So it's really not going to make a huge difference, I think, in terms of affordability, in terms of the market. Again, I don't know if you've been seeing, but a lot more houses are coming up for sale, especially in my area where I live. I'm seeing way more houses go up on the market. I'm seeing inventory sitting. Okay, it's not a good thing. Probably means that prices will kind of go sideways or potentially downwards, right? If these houses don't move, if inventory keeps building, like the Toronto condo market, that's crazy. But if other markets and other cities, you just have houses and townhouses, detached single family homes, if they start sitting on inventory and that inventory builds up, that's when you'll see prices start to come down. They have to, right? Because if people need to sell to move, or they can't afford their mortgage, or whatever the case is, they have to start dropping prices, and overall the market will go down. And I personally think that it's like a coin flip now. If we have a cut next month, we'll wait and see. I don't really think it's going to provide like a huge boost to the market. I think the market's going to be more stagnant for the rest of the year, possibly go down, especially if inventory sits on the market. It's going to cause sellers to maybe, hey, like, I need to get out of this mortgage. I need to sell this place so I can retire or go buy a property here. People's plans are changing, right? So if they have to sell, they have to sell. And if they have to sell when prices are down, not the best scenario, but it is what it is. What do you guys think about all this? Of course, if you guys have any questions about mortgages, if you want to run numbers, see what you can qualify for all over Canada, feel free to reach out to me. I'll have my information down below. And of course, please like and subscribe so other people can find this type of content. And I will see you guys in the next video. Take care.